The interest rate differential story is so far a carry story, and you have seen that in the past few months people converted of being an investor in the United States to a carry trader. So that actually means we have seen that long-term investment in the United States had been cut back, such like equities, corporate bonds, and as well foreign direct investment. But what happened is that this did not lead to an ultimate decline in the US dollar as people were getting engaged into money market investment. That is a concentration of liquidity, which is typical late cycle. But there's another point which is much more important for the valuation of the dollar. And that is when you create debt, you need to find somebody to buy that. And that means you need to look into the global availability of capital. And that is actually where we differentiate most to our competitors. The global availability of capital is in a sharp decline. And you see that maybe as well in the current account surplus of Europe. What used to be a seasonally adjusted surplus of about 35 billion by now is a seasonally adjusted surplus of 16 billion. And that actually means that the pool of funds is standing ready to buy US debt and other US dollar denominated asset to fund their foreign funding need, that pool is shrinking. A similar situation is happening in the case of Japan, where it is about their demographics. They are aging. Demographics 1.0 turns into demographics 2.0. That is actually when the pensioner is withdrawing from his pension insurance. That is when you need to repatriate funds back into Japan. And number three is that Japan's productivity outlook looks much better, and that means that the return of investment in Japan goes up. More of savings are going to stay in Japan. There will be less of an availability to fund US deficit.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.